This video single-handedly may be the most important lessons that I have learned in my experience as a Forex trader and stock trader. In this video, I have put together all of the major quote-unquote secrets that I have figured out in my experience over time as a trader. Now, when I talk about becoming a professional trader, I'm not talking about a millionaire sitting on a beach. I'm not talking about Lamborghinis and living that lifestyle that you see on the internet. I'm talking about actual steps to be taken to get us in the direction of becoming a professional, experienced, and successful trader in the financial markets. Here's the thing I want to start out before we get too far in the video. A lot of times people say trading is impossible. A lot of times say it's gambling, but let me leave you with this thought before we jump into some of the tips and secrets. If trading was impossible, nobody would do it. And if trading was easy, everybody would do it. I'll say it again. If trading and investing was impossible to make money, nobody would be doing it. We know people are doing it, and we just know that not everybody is doing it because it's not easy. So that is what I want to start this lesson or this presentation about. Let's get into it. Before I do, please do me a favor, like the video down below, share it with a friend. The goal with this video is to give you everything that I have come across in my experience as a trader, all of the major points that really, really helped me. So I hope it helps you, and let's get into it. So there's some obstacles that we need to overcome if we're going to be successful traders. Here's the reality. It's not easy, and trading success does mean freedom. It also, however, means that you're going to have to put a tremendous amount of work. There is no shortcuts to becoming a successful trader, but this video will hopefully give you some points to look into, to think about, and to work towards to get better, I guess, a little bit quicker. Here are some of the main obstacles that every trader, every single one, must overcome. Now, some people are going to have easier or harder times with each of these, but let's jump into the main three that I picked out for this presentation. Incredible discipline. Every trader struggles with the psychology and the emotions attached to their money being moved up and down and around in the markets. Everyone struggles with this, but every successful trader has figured out a way to keep this in check and be disciplined with their money and their approach. You need to be on it at all times. You cannot, as a trader, slip up one day and just be like, oh yeah, I'm just going to gamble today, or I don't care, I'm going to break my rules. One time is all it takes to really destroy a trading account. So discipline has to be on that incredible level in order to actually succeed in trading. Rigorous studying and strategy development. Okay, you've heard this before, but let me say it again. 4 years for a degree at college just to get a job that pays you a decent salary, right? That's a pretty standard approach for a lot of people, especially here in the US. Rigorous studying and strategy development, that's what it takes to be a successful trader. It takes 4 years of study, and for some people it takes longer. It's nothing different than real life, where you have to put in a tremendous amount of effort to get something that is worth having. So be ready for that, and be ready to put in a ton of work. If any of these things scare you, by the way, if they say, I'm not really interested in getting this into it, turn back now. Don't waste your time. Don't become a trader. Don't try and go for this, because it really does require all three of these things. And finally, the third one is capital. And we're going to come back to this one. I'm going to pause on that. But it takes money to make money. That's a short version. We'll talk about that more and potentially some ways to think about this further on in the presentation. So let's talk about some smart trader habits. I think it's a really important thing to do as we get into talking about what it actually takes to become a professional trader, to envision and kind of look forward at what a smart trader actually does from a big picture. And here's what I've got for you. Smart traders know that they won't win all of their trades. And they also know that they don't have to. This is not a gambling, all in every single time to try and make a bunch of money. This is a process of running a personal business. And that means that with a business, you have expenses, and with a business, you're hoping to make profits. That is what we are trying to do. And that is what smart traders do and understand, is they know they won't win all the trades, but they know that if they stick to a well, crafted strategy, overall, there's a strong chance that they will make money rather than lose it over time and over many trades. Second main point, smart traders don't try to call or predict the markets perfectly. I'm sure you've seen lots of people out there who try and call themselves, magicians or wizards or snipers or all these little kind of names. Forget all that noise for a second. Smart traders, every single one, has been weathered down by the markets. They've been humbled, and they know that money is not always made from trying to predict the market perfectly. It doesn't take every trade to be winning for a trader to be a winning trader. So that's point number 2. Point number 3 is smart traders risk small for large potential gains. We're going to talk about asymmetrical returns in a little bit later in this presentation, so we'll come back to this third point in a bit. Finally, smart traders only take positions if probability is on their side. I'm going to say that again because it's so important. Smart traders only put their capital at risk or take positions. That's what you have to think about. We're taking a position. That means we're risking our capital. They only take risk if probability is on their side. We'll talk more about that as we get further into the presentation as well. To be a smart trader, we need an edge. And there's a couple different things that we need, but one of the big ones is we do need an edge. Trading without an edge is certainly gambling. You have so many examples. I work with a lot of traders. Our business handles a community of traders, and with that, we communicate with a lot of people. There are way too many of you guys out there who are just throwing money in the markets, throwing money on red or black. Right? You're just gambling because you have no approach. You have no strategy. You have no risk management model. You have no entry and exit criteria. You just kind of say, hey, this looks like it's bullish. Let's buy it. Or, hey, that's going down. Let's just sell it. If you don't have a strategy, stop right now, turn back, head back through the door you came, because there is no point in trading without a strategy because you are purely just gambling. And I think that there's more fun things to gamble on. I gamble every once in a while just for fun. Trust me, trading is not as fun as gambling on something else like a sports game or something like that. Just my opinion, but I'm sure a lot of people would agree. Finding a steady, realistic strategy is absolutely key to trading success and to becoming a professional trader. In order to find that, there's a long process. That's not easy either. We'll keep going, stick around, keep watching this video. If this has caught you this far, please stick around. This video, again, took me a lot of time to prepare, and it is literally all of the things that I had wished I heard going into trading. This would have saved me so much time, so much money. So take it all in, take it all. Like, I hope some of you guys take notes. That's how much I really put a lot of time and effort into this presentation. So let's keep going. A good strategy brings in more than it lets out. Simple as that. A good strategy has an edge, meaning that it brings in more profits than it does in losses. Take a look here at the left-hand side of the screen, and you'll notice that we have a good equity chart that basically has some dips, but overall increases over time. This is what having an edge looks like. Notice the black arrows there, or the gray arrows, where we have little dips in the equity curve. But for the most part, the overall orange line there is the balance, and it is growing, while the blue line, or the light blue line, is the equity. So we have dips, and we have, the balance as well. The chart to the left is an incredibly steady return. Most traders are not going to have this sort of, consistency or this level of upward trend on their overall account balance. But envision that this is your account, and you want to have something that at least over time is going up. It shouldn't go up in a straight line because that's probably not sustainable. And it shouldn't go, obviously you don't want it to go down. We'll talk about backtesting later on in the video though. So again, stay tuned for that. But again, a good equity chart for the most part has dips, but overall goes up over time, okay? That's gonna be what really matters to having an edge, and that's what kind of a visual edge looks like. We need an edge. I already mentioned this, but it is so important. This is how we profit as traders. As traders, we make money not by being the perfect crystal ball predictors, but by letting our strategies develop profit over many trades. We don't need to win big all the time, or we don't need to constantly be taking trades that are profitable in order to be profitable traders over time. Steady profits over time come from reasonably small, risk, to letting your winners run, to catching big profits over time rather than all at once, which can lead to some high drawdowns and massive risk. And we don't want to go down that path. We want steady profits over time, slow and steady. This comes from a strategy you spend a lot of time developing and mastering. So let's take a look at some theoretical trades here for a moment, because we've talked about having an edge, but let's talk about having a specific strategy. When we are trying to be a professional trader, there's something you need to understand about every single strategy. So many people jump strategy to strategy saying, oh, it worked for a little bit and then it stopped working, so I wanted to find something better. No strategy is going to be perfect. No strategy is going to give you money all the time. Unfortunately, it would be nice. But the reality is that every strategy has drawdown and every strategy has good time. Take a look here at a 4-trade series in a trend line based strategy. All we're saying is, hey, anytime this thing pulls back to the trend line, we're going to be selling it at resistance, looking for this market to continue lower. Okay. Well, in this case, we had a good streak. We had 3 trades that actually resulted in profit. You can see we entered right here, price dropped, and we made money on the first trade. Price rallies back up, comes to our trend line, we sell into it, price comes down, we make money again, and the third time. Then price breaks out of that range and we take a small controlled loss, and we won 3 trades and we lost 1. Well, that result looks something like this. We have 3 winners, 1 loser, with a 2-to-1 risk to reward. I don't know if I mentioned that, but each one of these is a 2-to-1 reward to risk, meaning that we're risking 1 to make 2. 6% gains, 1% loss results in a 5% profit. Now, this is a daily chart, and this looks like it's maybe a month and a half to 2 months, so not terrible. And just taking those basic trades, we caught some decent profit overall. Not every single time is going to be like this, unfortunately. 3 winners and 1 loser, that's nice with a 2-to-1, but keeping that up is very, very tough and unlikely to be the result long term. We'll talk more about longer term expectations later on. Euro USD on the daily chart, look at this. Here's an example of things just not working out. And this, I'm sure, has happened to many of you. It's definitely happened to me, where it seems like every trade that you take just goes against you and it hits your stop. Check this out. We took a trade here on the downtrend, expecting the downtrend to continue, and bam, stopped out for a loss. Then the trend looks like it's shifting to the upside. We buy right here. The market drops. We get stopped out. No fun, right? That's 2 losses in a row. Then we see, okay, well, we got a bigger uptrend developing here, higher lows. We buy into this market and it drops. So this is what I mean by real professional traders don't try and predict every single thing that's going to happen in the markets, because it's just not going to work. Sometimes you have win streaks. Sometimes you have lose streaks. Or loss streaks. This happens to everybody and it needs to be accounted for. So let's take a look at this example. We took 3 losses in a row with a 2-to-1 reward to risk. We got 0 wins and we got 3 losses, a 3% loss. Now, I want to say something, because this is very different already than what a lot of new traders out there are doing. A lot of new traders, they're not risking 1%. They're risking like 10%. In this case, we took 3 losses and it only dropped the account by 3%. That's really not that terrible. But if we had done 10% risk, that would have been 30% roughly. It's a little bit less with the math. I know somebody will always correct that, because as your account drops in value, you're actually, if you're still risking 10%, the dollar amount that you're risking is less. But again, for the most part, roughly, just for sake of example, 30% drop in drawdown, right? So that's what happens with a lot of retail traders, a lot of new traders. That's what they get themselves into. So we don't want to be doing that. We want to risk small, and we're going to talk more about that in just a minute. But let's talk about some new mistakes or new trader mistakes that I see so often. I am in the business. I have a business around trading and investing. I have a community that we offer. We build software tools. We have a team of people creating content in terms of news coverage. This is something that I've dedicated a lot of my time to. And I can tell you, from working with so many traders and hearing so many emails and messages coming in from people around the world, we literally receive probably 500 to 1,000 messages per week, just from people who are, talking about their experience, talking about what they're going through. We hear it all the time, myself and the rest of my team. Here are some mistakes that I notice again and again and again. Traders often focus way too much on entries and exits. People think that the secret to becoming a successful trader is in the entries and exits and being a quote unquote sniper. I always find this funny, because there's people out there who are always like, oh, I'm a sniper on the charts. And you very well sometimes may get a great trade. I've had great trades that, I feel like I get into the trade and immediately goes in my favor, but it's a vast minority of the actual trades that I end up taking. And that's perfectly fine. You don't need to be that perfect to actually make money. I'm not some guru that makes every single trade, 1,000,000% or anything like that. I'm just a normal dude, has figured out some consistency in my trading, and it doesn't have to be a sniper gang or a sniper entries all the time to make money. Sniper entries are fun to think about, but they're unrealistic to expect all of the time. And by the way, in case I didn't make it clear, a sniper entry is something like this, where you literally get in, you have like a nothing stop and then a massive take profit. And I guess, it's not impossible, but it's very, very unrealistic to expect these to be a consistent or, a common occurrence in trading. So just again, this is something that so many new traders get caught up on, and we see so many emails and messages, Nick or whoever they're talking to, how do I get better entries? How do I know when to get out, right? They just want to know, when do I get in? When do I get out? That concept by itself is not going to make you profitable. Even if you have a pretty good entry and exit system, nothing is perfect. I settle personally, like I mentioned, I settle for finding decent entries and accepting that drawdowns happen, as well as expecting that not all of my trades are going to be quote unquote sniper entries. So here's mistake number 2. This mistake is something, again, way too many of us struggle with. I definitely have in the past as well. This is a big, big, big no-no. Moving a stop loss endlessly is a very, very dangerous game to play. Have you ever done this? Because I'm not calling you out, I'm actually calling myself out, because this was something that I definitely struggled with in my years, or my first, year or so, 2 years even, of trying to learn to trade, trying to improve in my trading. I would take a position, let's say I took a sell here with a small stop. Price starts moving against me and I say, oh, well, I don't want to take this loss, it's going to hurt. So I move the stop, and then I move it again, and then I move it again, and I move it again. And all of a sudden I have this giant loss on my account that's like unrecoverable, or I can't recover from. I don't know if that's a word, but the idea is that we let these losers get so big because we just don't want to take a loss. And the sooner I realized, or as soon as I realized that taking a loss and moving on was a really, really healthy practice, I started doing it a lot more, and it definitely improved my trading. And I think that it might improve a lot of other people's out there. But I get this message so much: Nick, I can't stop moving my stop loss. If you're going to take a trade, for me, a really, really, really important thing is not to move that stop loss ever, because it is so, so dangerous to do so. Because once you start doing it, it's a bad habit, and sometimes it might work, but a lot of times it ends very, very badly. Okay, this one's going to be a fun one for me to talk about, because I am obviously on social media. I talk all about trading and investing, and I'm just really not a big fan of some of the ways that a lot of people out there hype this stuff up. This is a very, very serious craft, a very, very serious business, and a lot of people lose a lot of money, and it's kind of sad. So when I see people out there that are demo ballers, or they are people out there just showing off or flexing or showing nice cars, there's nothing wrong with having success and buying the things that you've earned. But it's another thing when you start showing them off and saying that trading and investing is just easy and just buy this $10,000 course or whatever, right? There's just too much of that going on. And I'm just going to say right off the bat, you're probably better off running away from those sort of scenarios. People who show massive, massive profits and, just they're on Instagram. Oh, hey, look at me. I'm making whatever amount of money just from this one position really quickly. They actually could be actually making that money. But until they show you a track record, I would say run away, because anybody can open a demo account and show you fake profits and just start selling to people and ripping them off as if they know what they're doing. So avoid this at all costs. Avoid people, in fact, who brag in general about giant profits or claiming that they are trading gods, or, as we mentioned before, snipers or market masters. These people are usually being deceptive and probably trying to sell something for a ridiculous price. Again, there's nothing wrong with selling things, but I believe that if you're going to do so, you should have, a realistic outlook. You should have probably some sort of, honest reviews out there, as well as what we mentioned at the end here, which is track records, which track records are your friend. People who are out there claiming you're going to become a millionaire, you won't see them posting a real track record that has what it would take to become a millionaire from trading with a small amount of money. They are either starting with a massive amount of money, or they just never actually did it and they're just using demo accounts. Real traders are usually modest and know that the market is not always their friend. Not every day in the market is a good day. I can tell you from experience, I've been doing this for like 5 or 6 years now. I think it's more like 5, but I've been doing it what feels like a very long time for me. And I can tell you that there are times when the markets are good to you. There are times where the markets just aren't your friends. So anybody who is acting like they're just chilling or sitting on a beach, run away. Okay, so I mentioned track records. This is just because I mentioned it, I like to throw it in there. This is some trading that I did personally on my myfxbook.com account. And I basically took a bunch of trades during the pandemic. I used a unique strategy that I had developed. And for the most part, what I did was I created a performance here from July to October before I shut down this account because I just switched brokers to another one. But anyways, the point here is that this is not like 10,000% returns. These are not massive returns, but for the most part, it's slow and steady. You can see we had some drawdown here, had some drawdown here, and we had some good trades here. We had some good trades here, right? There's some good and there was some bad, and that is a realistic, approach to trading. Don't expect for this to be every day, right? This is, in this, what is that? 4 or 5 month span, there was only a couple times where I took really big winners, and the rest of the time was just kind of patiently waiting and even losing money during those off times. So in the end, I think this account, I closed it out for roughly 32 to 33% gains, and that was a relatively aggressive account for me. So this is, just keeping things in perspective. If you had $1,000 and you made 32%, that's about $320 profit. So think about it that way. You just have to have that realistic outlook. We don't want to fall for this hype that's out there. Again, and there's another one of my accounts that I posted on the website. I posted videos about this on YouTube and stuff like that. $50,000 worth of stocks that I bought turned to 80,000. I think it's actually up to like 85 now, fortunately. But again, just understanding what is realistic, what is not realistic in markets is one of the huge mistakes that so many new traders who are trying to become professional never actually kind of come full circle with. So I mentioned earlier this concept of asymmetric returns. Now, I'm going to read some of this. I got it off of a website. I've got the source down at the bottom of the screen, but for the most part, asymmetric returns or investment returns are really what we're ultimately looking for in markets, or at least what I'm looking for in markets, because this is the sort of thing where a good strategy and a good trader will utilize this again and again. So an asymmetric investment strategy or trading strategy is an objective of earning a profit from rising trends or losing less when price declines. Basically, when the market's going in your favor, you're making good money, and when it's going against you, you're losing less money. Okay, an asymmetric risk management strategy involves active risk control strategies that aim to limit downside and, of course, potentially go for the most on the upside. Asymmetric risk management is necessary to create an asymmetric risk to reward profile, total profits exceeding the losses. So I found this and I thought it was very, very interesting, and I figured I would share it with you. But this really is what any sort of good strategy employs, is keep that risk as small as possible while keeping those profits at highest rates possible. You can probably see how the adage of cut your losses short and let your profits run is an aim to create an asymmetric return. So that's one of the key principles that I use in my trading, is cutting those losers and letting the winners run, to try and do exactly this, where we keep our losses small and we look to make profits the biggest we possibly can. So let's talk about some strategy examples. I know some of you guys might be looking for, Nick, give me that secret strategy that's going to make me a bunch of money. Just heads up, it really doesn't exist. There's many strategies that work. There's many more that do not work. But generally speaking, it does take a lot of time, energy, effort to backtest and to build concepts that work for you, and markets change. So it's one of those things you have to be able to adapt and to change things. That's why actually, if we go back to this account, I also shut this down because here at the end of the pandemic situation, I've actually slowed down on this particular strategy that I built more specifically during this high volatility situation. During 2020, things have been crazy, and here in July, this is when I officially started this strategy, which was looking to catch big trends that were developing here in 2020. And as things have started to calm down a little bit, the strategy has been performing a little bit less great. You can see we had a great run all the way up to like 50% gains and gave some of that back, closing out again around 33% profits in this period of time. So, it's about being adaptive as well. So let's talk about some general strategy examples. So people ask, well, what do we need? What kind of strategy returns would generate profitability? And here's some examples. Let's say that system 1 here has a 45% win rate with a 2-to-1 reward to risk, meaning that anytime we take a trade, we're risking $1 to make $2. In a $10,000 account, risking 1% per trade, which is employing, again, a trading style that limits our downside, keeps our drawdown to a minimum ideally, 1% per trade is $100 on that $10,000 account. And if we took 100 trades in a year, let's say this is kind of a more of a swing trading account, which is for me the most comfortable style. But again, people have different preferences. And again, why some strategies work, some don't. It depends the time frame, it depends the instrument, all sorts of stuff. If we were to take 100 trades in a year and we have a 45% win rate, this actually should say 45-55, but you can see it here. 45 trades that were winners resulted in a $200 each time it won for a total $9,000 gain on our $10,000 account. Well, we also took losses, so let's account for that. We took 55 losses, more losses than wins, but only lost $5,500 because we kept that loss level to a minimum, only risking 1%, so losing $100 rather than $200. Well, we lost $5,500 on those losses and overall came out with a profit of $3,500. Great money there. Not bad at all on our $10,000 account in that year for a total profit of 35% returns. Now, some people might say, well, Nick, that's terrible. A trader should be able to get 100%, 200%. And I'm going to say this. I would say that traders out there who, it's just very, very unlikely for the average trader who actually reaches success to generate returns of excess of 50% returns actually on a consistent basis. You very well might have a year where you make 50% or 60%, right? If we go back to, again, if this had continued to go well, I could have had a year where I made 65, 75% on this account. But inevitably, we have win streaks and we have losing streaks for a reason. And that is why, again, these returns are not always going to be so great. So on average, if you were able to generate a 35% annual return on average, that would actually be incredible. And don't let anybody else tell you otherwise, because, again, for the people out there who show track records, there's very few that are doing even 35% per year. Now, if we were to step it up even more, check this out. And again, this is incorrect, so ignore these two numbers. System 2 has a 50% win rate with, again, a 2-to-1 reward to risk. On a $10,000 account, risking 1% per trade, that's $100. If we took 100 trades in a year, it would actually be 50 wins, 50 losses. 50 wins, this is incredible. Just a 5% more win rate gives us plus $10,000 in profits and minus $5,000 in losses, with an overall profitability there of $5,000 or 50% annual returns. So you might be asking yourself, well, how good is my strategy? If this is your strategy, if you've back tested this or even tested this and traded this, if you have this sort of return long-term, that is incredible. Please send me an email if you have these sort of returns and you have a track record linked, because I would love to chat with you. That would be really, really cool to hear, what you're up to and what's working for you and what's not. So send me an email if you would like to. You can send our support email, and I'm sure they would send it along to me if you have these sort of returns on a track record. That'd be fantastic. So let's talk about probably the most sobering component to trading success, which is risk management. Because again, we talked about some realistic approaches. This is really what we're getting into, is risk management. In my opinion, risk management is the second most important component of successful trading. We're going to talk about the most important at the end of the presentation here, so be ready for that. Many traders risk large amounts of money per trade, and they blow accounts quickly. That's one of the biggest common mistakes for new traders. Many of you guys have probably done that yourself. I know I have in the past. So we don't want to be this person. We don't want to be the person risking a big amount of money per trade. We don't want to be blowing accounts like that. We want to go slow and steady. Give up the dream of getting rich quick. It's how 99% of traders donate to the market. Seriously. Like, this is such a problem. It's really, I'm not saying this to try and sound arrogant or stuck up or, mean to the people who have dreams out there. I'm trying to help because I have seen way too many people send horror story examples of losing all of their money because they bought into the hype that was out there and wanted to get rich quick. So don't let that be you. It's how 99% of traders donate to the markets. They give money to the markets because they're just trying to get rich quick. They're taking massive risk on their account. And then when it blows up, they are just left confused. So don't let that be you. Get rid of that dream of getting rich quick. There's no such thing as getting rich quick unless you just got incredibly, incredibly lucky. Everybody you know who is successful has, for the most part, they have years of dedication behind what you see. No different in trading. Successful traders have years of dedication and work to becoming rich. Just like anything else in life. Just keep that in mind. Risk management, part 2, is the most sobering conversation, like I said, for traders. Because they don't want to hear that, risking 1% is reasonable and risking 10% is really, really dangerous. Because if you're only risking 1% and you only have $200 in your account, your returns are not going to be very impressive in terms of dollar amounts, although they might be impressive percent-wise. But risking any more than a few percent per trade definitely leaves our account open to huge drawdowns. I've done so many different tests out there, and unless you are just an incredibly accurate trader, if you're taking large risk and you run into a drawdown or a losing streak, it can wipe you out very quickly. A lot of traders, again, they risk like 10% per trade, and then they don't know what happens when they take a 5-trade loss or streak of losses, and they're down by a large amount. Just be careful with it. The trade-off here is that our returns will likely not be as massive short term. Long term, they could be great if we just accept that we can just risk small, build things up, be consistent, build that skill as a trader, and do it over time. Again, I'm giving you everything I've got in this video. I'm not trying to sugarcoat this. I'm not trying to make it sound better than it is. I'm not trying to sell you anything. This video is completely free. I'm telling you as is that people who risk massive amounts almost certainly will go quiet and lose all their money, and it's sad. So don't be that person. Let's take a look at some examples. Oh, we already did examples, so let's skip that. This slide is out of place, but we took a look at, if we go back just really quick, these sort of situations where, again, we're risking 1% and we're actually able to generate good returns. So that was what I was going to get at with that. Smart traders, backtest and forward test. This is a big one that a lot of people I see don't do enough of this. I actually asked this on my Instagram at one point. I said, do you guys backtest? And a surprising amount of you guys had not even heard of backtesting, which is definitely a very, very important component to trading success in my personal experience. So backtesting is the process, in case you don't know what it is testing an investment strategy by taking theoretical trades on historical data to get a general idea of how your strategy performed on past data. Forward testing, which we'll talk about in a second, is testing an investment strategy in real time to see how it does in a live environment. Okay, so that is something that I think you do once you get done doing the back testing. So let's take a look. This is kind of just a picture I saw on the internet and wanted to share with you guys. This is what back testing kind of looks like. It gives you an idea of what your strategy has done historically if you do it correctly. Now I have videos on back testing. If you do a Google search or a YouTube search for Trader Nick back testing, I've got plenty of videos doing this. I heavily recommend that you spend some time checking those videos out and just get yourself into a spreadsheet, start testing your concepts. Very, very important to do for any trader who is serious about developing a strategy that has an edge. Here's some metrics to look at. These are the most important things. There's lots more that you can look at. You can look at profit factors and other things like that. But for the most part, when I'm backtesting, the big things that I want to know from a strategy that I'm trading is the max drawdown. How bad does my trading strategy get, right? Because it's going to get bad. It's no question that it will at some point or another have a streak of losses or a drawdown or something that's just no fun. How bad does it really get on average? Next, we're going to look at the win percentage. How often does a trading strategy win, and how often does it lose? Do you win 30% of your trades? Do you win 40, 50, 60, 70? You might say, well, Nick, if you only win 30%, that's not very good. But if your winners are 3 times bigger than your losses, that can actually be a very profitable strategy. So it's important to know these details in our backtesting. Finally, what's the average win or loss? Like I just said, are our wins 3 times bigger than our losses, or are our losses the same as our wins? This is important to think about as well. What about forward testing? So forward testing, usually I will do after I backtest a concept for a little while and feel pretty confident. I start getting my demo accounts out, or if after that I'm feeling a little bit more confident, I'll even try it on a small live account to see how things go. Does forward testing match the backtest that you did? If you did all that details and you did the backtesting and you got things like max drawdown, win rate, and average win and loss, does the forward testing that you do after the fact match what we were seeing in the backtest? Very, very important to know that if yes, that's a great sign. We can continue to test and maybe even slowly look into putting real money on the line until you develop confidence. If no, it's time to go back to the drawing board and start over. We shouldn't even be trading something if it's not looking solid overall over, a testing period. Okay, let's talk about capital requirements, because I put this at the end of the video for you guys who are dedicated enough to get here, because most people are going to see this and they're just going to dislike me for even saying stuff like this. Capital requirements for the starters are heavily dependent on where you actually live in the world, because a US dollar means very little in the US, but it might be different in other parts of the world. Different countries have different living requirements in terms of money. So this is something that I can't comment. I can't say, you need $1,000 to trade, or you need $10,000 or $100,000. It really depends where you are in the world and what your broker offers in terms of lot sizes and leverage and that sort of thing. My unpopular opinion, number one, is that if you plan on trading with respect to everything we've talked about here, using proper risk management, a minimum trading account should probably be $500 US, because you need a little bit to handle the leverage and the margin and the volatility that even a 0.01, which is the minimum for most brokers, does to your account. Another unpopular opinion, and by the way, if you have less than $500, there's nothing wrong with trading with a demo account and building up your capital through other sources of income. If you have a job, or I used to cut grass and deposit every penny I could into my trading and investing accounts, right? There's all sorts of things that you can do to get that capital up. You just got to get crafty. And this is, again, part of being a trader. You got to be an entrepreneur overall in order to be successful at trading. Okay, so this is another unpopular opinion. If you want to trade for a living, you need a lot of capital. This is a long-term goal for most. Not everybody gets to be a trader for a living. There's no, rule that is what's going to happen if you trade for 3 years or for 5 years or for 10 years. You need money to trade. And let's actually look at the stats on that to see. So I mentioned that something like a 25, 35% return on investment per year is very good, especially considering that something like the S&P 500 over the last 100 years returns something like what? I think it's like 7 to 9% per year. So if you're doing 25% return per year, you're handsomely being rewarded more than buying and holding like a lot of people do. So 25% per year on average, because you're going to have up years, you're going to have down years, you're going to have flat years. If you're doing this long-term and you're very serious about it, you will see all of these. For the most part, most traders do. A pro trader is not a crystal ball operator. We have good times, we have bad times. A pro trader manages money for a living and keeps it as protected as possible while still trying to grow it. So let's talk about capital basis. We mentioned here at the end that if we want to trade for a living, if that's like your end goal here as a professional trader, if that's what you would constitute a professional trader, you need to have capital built up. Here we have $50,000 in an account. If you were to make 25% returns per year, that's $12,500. In the US, that's not enough to live off of. In fact, even $25,000 is probably very much pushing the envelope for most people, especially if you have a family. And that's using $100,000 in an account. If you have $200,000, 25% per year gives you $50,000. Now you're talking a decent salary. However, if you really want to trade and you want to build up capital over time, I would like to return this money back into my account and grow it over time. rather than withdraw all of it to live off of. So even $200,000 for me is not really enough to trade for a living. $500,000, this is where things get interesting, because if you were to make 25% per year, which is still not easy, but I would say achievable, $125,000 in profits. Now you're talking a nice salary and enough room there to reinvest money into an account. For most people, that's debatable depending on who you are, what your cost of living is, all of that sort of thing. Again, this is just some numbers to think about. Now, this is for me kind of a really big number that most people it's going to take many, many years to get to, but really a pretty handsome return if you're able to get to this point. $1 million in an account, 25% return on investment per year is $250,000 per year. That's great. Now I want to say something. People say, oh yeah, well, Nick, the answer is just have a bunch of money and then you can trade for a living. And yeah, I guess that's the shortcut. But there's a lot of things that we can do to grow money. We don't have to be here right away. We can grow smaller amounts of money, $10,000 or less, and build it over time, reinvest, work other sources of income, create more capital, and eventually work towards the end goal. Nobody said this was easy, right? If you want to be a professional trader, you got to get ready to work, because it is a ton of work. That's what I got there on realistic expectations. Let's move on. I mentioned earlier that risk management was the second most important. Number one is definitely psychology. I know it's cliche. I know people will probably skip this part, but it's so important to understand that psychology is the biggest barrier to trading success. If you've traded for any amount of time with real money, you know this is the case. Most people just do not have it under control. It's something that I still work on every single day in improving in my own trading. Psychology is a grueling and painful process to improve, but it is 100% necessary to become a professional trader. You have to get ready for all of these wonderful features of being a trader. Rejection, failure, humiliation, self-doubt, and criticism from loved ones, friends, family, all of that. This is like everyone I know who trades and has actually had success in it experiences all of these. This is just the reality. And it actually doesn't stop. There's still times in my trading, after doing this for 5 years, where things are frustrating, things are tiresome, things are tedious. All of those psychological challenges are still there, and you don't necessarily rule them out, but rather you get better at dealing with them over time. Successful traders have worked on their psychology continuously and continue to do it for life. It's really, we're still human beings. Trading is much like starting a business, and I've done both, so I can say that there are so many similarities. I have if you're not familiar with my channel, but also my company, A1 Trading, we do all sorts of news coverage. We do partnerships with brokers. We create content and articles and coverage of the markets. The business side of things is so much similar to actual trading success, because you get all of these emotions, you get all of these challenges, and sometimes things seem never ending, or they pile up, or it seems impossible. So it's challenging, and this is the number one barrier to trading success, because just honestly, most people just never get past this. It's just so hard to become disciplined. And that's what I mentioned at the very beginning of this presentation. Discipline is so key. And finally, just to add to put it into perspective, entering on a trend line breakout is so much easier to learn and to understand than mentally dealing with a drawdown for 6 months. 6-month drawdown, that's going to challenge you a lot more than learning how to break or do a trend line breakout strategy. Okay. So not to say that this is not important, but understanding that this sort of stuff only comes from experience, and you're not going to get it from a course or somebody telling you online. This is the sort of stuff that will make you a professional, is experiencing this and coming out stronger and learning from past mistakes. Okay. If you enjoyed this video, please do me a favor. Help another trader out there. I made this video with the intention of helping somebody out there who is really trying to get better. If this video helped you, please do me a favor. All I ask is send this video to somebody else who could really use some help. This video, again, took a long time to prepare, and genuinely is I think it's probably one of my top 5 most important videos that I've ever worked on for traders out there trying to improve. Again, if this video helped you, please make sure to leave a like down below, share it with a friend, and subscribe to my channel for more free content in the future. Thank you so much for watching. I hope you have a fantastic rest of your day and good luck on your journey. Send me a message sometime and join the community if you are not already a member of ours, and we will see you in there. Thanks so much.